Hi all, Tony Sycamore here. It is Sunday, the 25th of April, bringing you a video review of four key charts of interest that are catching my eye for the week ahead. I'd like to start this week with the Euro USD, which is now up on your chart. And what you can see in terms of the rally in the Euro from this time last year has unfolded in five waves. You can see the one, two, this is wave three, wave four, and wave five. Now, for the entire duration of this pullback, because of this impulsive push higher, the analysis that we work with has suggested that this move is corrective, and we've been running with that for quite some months now. We called a low down at this 117.04 low. We were looking for basing. We looked at it a couple of times, didn't quite work out. We got some nice bullish divergence down here in the euro. You can see that on the RSI. And then the euro sprung above the 200-day moving average, which is a positive indication, and then got itself above this 119.90 area here, which comes from these highs here. Obviously 120, a big psychological level as well. Now, into the ECB last week, we saw some consolidation, but the declines were actually held at this 119.90, 120 support area. And then on Friday, a very strong green bar higher, which represented the euro pushing up towards this trend line resistance coming from off the 123.50 high. Now, as we said, this area is around 121.30-ish. So this is resistance now for the week ahead. But if the euro was to break above 121.30, I think it would be a good indication that the euro can poke its head up to look at this 122.43 high from late February. And then if that area was to break, you would look towards the 123.50 high from early 2021. In terms of support levels for the euro, where we like to buy the euro is dips back towards 120, should be well supported, and certainly back towards this 200-day moving average, which is currently coming in around 119.20. So dips, looking to buy dips here, or potentially a sustained break above this trend line resistance, looking for the next leg higher in coming weeks. For the Aussie dollar, we have maintained a similar view of the Aussie dollar. There is a nice five-wave impulsive rally up from the November lows. The pullback we have seen as corrective. We've maintained a positive bias in the Aussie US because this is a corrective pullback. Held above the 200-day moving average, we got some bullish price action here, which was the trigger for longs. And I quite like, we actually preempted a buy signal here, but I like the fact that the Aussie has spent the past 7 days consolidating above 77 cents. Now, if you look back to this price action through here, there was about 8, 9, 10 days where the Aussie was working with support around this 76 cents, just below 76 cents. You could see it poked just below there a couple of times. Likewise here, just below 77 cents a couple of times. But broadly speaking, this is now the line in the sand. And while the Aussie holds above 77 cents and certainly no lower than this 76.70 high over here, I think the Aussie has a good chance of pushing up to this 78.50 high initially. Above here, of course, the next level becomes the 80.07 high. Looking at gold now, this is a little bit of a frustrating chart for us because we have bought the break of gold, or we've liked the break higher in gold post this move above this resistance 1765 area. And in the middle of last week, things were looking really good. Gold pushed up towards 1800, but the pullback into the end of last week is a little bit of concern. Not so much from a technical basis because we're still above this support area here, which was resistance 1765, but we don't want to see a winning trade turn into a losing trade. You know, you're $22 in the money. The stop loss in theory should be below this support zone, let's say anywhere below 1760-ish. The problem, of course, if you leave your stop loss where the trade is wrong, technically you risk having a winning trade turn into a losing trade. I don't really like that. So my view is, look, this pullback is a concern. I don't like what I've seen here. Obviously a lot more comfortable when it was up around $1,800. But I think for the early part of this week, I'll probably move to the sidelines in gold and just wait to see how it trades in this support zone here. Because the important part is while we're above 1760, it still looks okay. I just don't really feel that comfortable with this pullback. And if gold was to break back below 1760, as I said, I think that would be a bit of a negative development. And instead of looking up towards 1850, 1875 odd, you'd be looking back for a test of this 1677 low. So in a nutshell here, a little bit uncomfortable with this pullback into the end of last week. If you were long, if you bought this breakout here, either tighten the stop loss right up or potentially look to square up, and there will be another chance to get on gold. As we know, these markets don't move in straight lines. So that's what I'm seeing in gold. Finally, to Bitcoin. Now, this time last week, we were talking about the fact that Bitcoin had in place a couple of very important topping signals for us. We spoke about the fact that this looked like a diagonal wave 5, which is the ending move of a 5-wave impulsive move. You can see the 1, 2, wave 3, wave 4, and wave 5. And when we did this video last week, Bitcoin was still sitting up above here. Remember, Bitcoin doesn't shut. But later on in Sunday, it absolutely fell out of bed, basically. A 15% decline, which was promptly brought back up towards 55,000. However, the damage was done. And in terms of where we were thinking the pullback could extend to, our base case was towards this support, 50,000, this low over here, and the 200-day moving average, which was coming in around 49,000. Now, it's gone well below there, 47,000, a spike below there 2 days ago, but back above this 200-day moving average. So in essence, the minimum expectation for a pullback is now in place in terms of a break of this trend line support and a wave 5 pullback. However, if this is a complete wave 5 rally, this 3, 4, and this is the wave 5 here, the pullback should deepen. And I don't expect it to happen straight away. This will be support. There is buyers operating in this area. We can see it currently with these little tails, shadows, wicks sitting below the 200-day moving average. But if Bitcoin was to break below 47,000, then things start to get a little bit interesting. We would be looking towards the 43,000 low, the 42,000 high here as a band of support. Below there, and this is where the Elliott wave theory comes in again, once a 5-wave complete impulse move is complete, I like to see a pullback to the wave 4, the previous wave 4, which is over here around 29,000. So keep that in mind for this week. If Bitcoin was to start to slip below this 40,000 area, 43 to 42K would be your next target, and then potentially the risks are for a move down towards 29,000. That is all for this week. Thank you very much for listening. If you like our videos, please subscribe to our YouTube channel. If you're looking for more trade ideas, please visit our website, www.techfxtraders.com, and check out our reports with three reports per week and also trade ideas attached. Thank you very much for listening.